Loom network is going absolutely bonkers, more than 600% in the last few days. Does it make sense to jump on this? And if yes, how can we time a potential exit? Because Loom does go in pretty nice waves. Here, this is the recent rally, 605% within roughly 1 month. Now let's zoom out a little bit. This is the daily chart. This is the recent rally. And the simple approach would be to simply just draw lines here, right? And say, okay, there are supports, there are resistances, and we've just crossed a recent resistance. But this is pretty arbitrary. The problem with subjective approaches like this is that you cannot test them, right? You could have drawn any kind of line just 2-3 weeks in the past and then just redraw them again as the shape of the charts change. I think a better approach is to use statistics, to use backtests, simulations of buying and selling the Loom token based on predefined rules. And then we simply check what kind of combination of rules worked best in the past. And then we are assuming that given that psychology around the Loom token doesn't change too much in the future, that the same rules that worked in the past are also going to work in the future. So this is one of those approaches. We could be using a moving average and we could be buying whenever the price is above the moving average, and we could be selling or even bet on falling prices whenever the price is below, right? And this way we can quantify how well does an approach like this work. And then we can test, should we take the 100-day, should we take the 50-day, or maybe the 21-day simple moving average, right? What kind of duration here worked the best in the past? And so we've got this fancy Excel sheet here starting in March of 2018 all the way to today. And we are backtesting several moving averages, the simple moving average, the exponential moving average, daily moving averages. Buying and holding over the time would have given us annualized compounded 12% per annum. And here we can see trading according to the moving averages, what duration corresponds to what kind of return. And we do have trading fees in here, 0.2% with every trade. Now another way to show this exact same backtesting result is this chart. So again, buying and holding, this time as a black horizontal line. The simple moving average results are in turquoise. The y-axis is the annualized return. The x-axis is the duration of the moving average in days. In other words, the best simple moving average for the Loom token is the 49-day simple moving average. It would have given us annualized almost 150%. Every year compounded since 2018. And this is then what that looks like on a chart. You can barely see the price of the Loom token, that's here in white. In turquoise, we see the backtested result. So this is a linear scale. You can also look at this on a logarithmic scale. So here, every horizontal line is a 10x from one another. So very nice, consistent outperformance of the backtest versus just buying and holding the Loom token. So let's look at that. Let's adjust the moving average to 49 days. And here we go. That's the moving average. So again, we are getting into Loom whenever we cross that moving average duration, and we exit whenever the price goes from above to below. This is historically the approach that worked the best. Now we can see a first problem with that approach on the current chart. Because Loom moves so fast, there's one of two possible scenarios. Either we are crashing down and we'd still have to be in the asset for another drop of 67%, or we are hoping that we simply just go sideways for a while and that the moving average can catch up and then we can exit for a higher price. Now when we just look at this historically, right, very often we saw these short-term spikes. Loom spiked up and then went down again. It spiked up and went down again. And so even though this was historically the best moving average, sometimes we don't really take advantage of these massive rallies because we simply exit too late. So usually I like these kinds of moving average approaches a lot. They tend to work for a lot of different altcoins. The moving average durations also tend to be relatively stable over time. And even if we are a little bit off in the duration itself, the performance still seems to be alright. For example, even if the best moving average, say in the next year, is not the 49-day, but maybe the 60-day or the 40-day, things should still be alright. Remove the last sentence. Things should still work out properly. But right now, in this particular situation where we went up that massively, it does have a bit of an ugly taste to it. Here, this is the data I'm using for the backtest, right, since March of 2018. And it looks like Loom has somewhat of a floor and then gets these random shots up. But on a logarithmic scale, this is much less stable. Right here we see how there really is not a floor. There's simply just momentum shifts every now. And yeah, historically, we rarely have been that high in the price of Loom. Loom is currently the trendy crypto. The crypto everybody's talking about, the crypto that has all the attention. The issue is attention has a premium. Wherever currently the eyes are on, you get an inflated price because attention moves from asset to asset. Today it's Loom, tomorrow it's something else. And once it's something else, then all that short-term fleeting capital that's just riding this quick wave, they are out, right? That capital is moving then along to something else. So be careful not to pay that premium to the short-term speculators to then be the exit liquidity of those people. You don't want to be buying high and selling low. You don't want to run behind a train that has already started. I do not have a crystal ball either where this is all going, but instead of focusing on what's currently fashionable, why not develop a strategy that's more fundamentally rooted? For example, right now, it's not altcoin season in my humble opinion, right? Most altcoins are currently underperforming. So why not simply bet on altcoins to underperform in aggregate? Not necessarily short the Loom token, but short altcoins that nobody is talking about and that nobody is likely going to talk about in the next months. Why not bet on those coins to do worse? Because that's relatively likely, right? It's likely that a forgotten coin continues to further bleed, continues to further fall, than it is that a random altcoin now shoots up because it is not altcoin season. Feel free to join us on Telegram. Link is down below.